Is $2 million enough to retire comfortably? Hi, I'm Cary Smith, and I'm with Client First Capital. And I'm sitting here with Cheri Turner.
Hi.
And Cheri and I, today we're talking about that magic number of $2 million. And here's what I want to do. I want us to just break this down. No fluff, no clickbait, just an honest discussion of, is 2 million enough? If it's not, what are the challenges? If it is, what is your lifestyle going to be like? And so I think it's just good for us to just maybe clear this out a little bit and just have a really good, honest discussion about, is $2 million enough to retire comfortably?
Right.
All right. So let's jump in.
Yeah. So, why does 2 million sound like the magic number? In the industry, 2 million is kind of considered sort of one of those targets for being ready, as well as we tend to see a lot of clients who fall between that million and $2 million range. For a lot of clients, they kind of feel like, once I've amassed 2 million, I should be good. I should be ready. But really, it depends on your situation, right? Conventional wisdom says we have the 4% withdrawal rate, which essentially at $2 million provides you about $80,000 a year in income. And with this being looked at as the benchmark, you really have to consider, what is the context? You need to consider things like, where do you live? How much do you spend or want to spend? And how long are you going to live? What do you want your lifestyle to be? All of these things are factors.
Yeah. So, Cheri, so one of the things we talked about is 2 million enough? I don't like the answer, it depends, but but at the same time, it does depend a lot on your lifestyle. So let's look at a couple of different lifestyles, because not everybody's the same. And people, some people have their mortgage paid off, some don't. People are in different places. And so we'll look at a couple of different lifestyles. And so let's start with the moderate lifestyle. So this would be, I would say, a couple that has, no debt, their house is paid off, average healthcare expenses. You already mentioned a 4% withdrawal rate is about $80,000 a year.
Right.
You add on Social Security once they're there, things get even a little bit better. And so I think for someone who has this moderate lifestyle that I just described, probably 2,000 is going to have them in a pretty comfortable retirement situation. And now there's we'll talk later about, there's some factors they could do, some things they could do to improve that situation and improve their level of comfort or possibility of success. But I feel that moderate lifestyle person, and for the most part, is going to be able to retire pretty comfortably on $2 million.
Right. Then you also have another scenario though, Cary, where if you have somebody who lives in a high cost city or intends to live more of a luxury type lifestyle, if you're living in New York City, San Francisco, San Diego, $80,000 might barely cover your rent, dining out, and travel. So the question of, is your mortgage paid off or are you paying rent, becomes very important, right? Because your rent will continue to progressively increase over the period of retirement. So these factors come into play. $2 million can go very quickly if you're actually burning more like $150,000 a year.
Right. That's right. So yeah. So the life that you live in retirement matters, and as well as other factors. Let's look at another scenario. And so this one would be more of the, I'm retiring early, right? So I've hit that $2 million mark. Let's say maybe I'm 50 years old. I want to retire early. And so, in that scenario, $2 million has to stretch a lot longer, possibly 40 years or longer, right? And so inflation becomes a bigger threat. And so I think you got to think about inflation and the impacts of inflation. You're going to see a lot of different economic cycles in that length of time. And then also, that 4% withdrawal rate maybe becomes a little bit riskier. And maybe it needs to drop down to 3%, which would, be 60,000 a year. And then, I think there's other factors that if you're 50 and looking at retiring early, maybe there's a greater likelihood that your mortgage is not paid off or that you still
Right.
have some debt,
Yes.
things of that nature. So those are things that a person could consider. And I would say $2 million at that age, there's a lot of risk.
Right.
And if a person could, it may work in their favor to work a little bit longer, make sure their house is paid off, there's no debt, and maybe just exceed that $2 million dollars a little bit.
Mm-hmm.
But at the same time, if that person's 50 and looking to retire, they really do want to get out of the workforce and start enjoying their retirement life. And so I would stay, really close to determine, how quickly can I retire?
Right. Absolutely. And when we think about it, there's a number of factors that really determine whether or not you can make it or break it at this $2 million mark. The first, as we've already alluded to, would be where you live, because the cost of living and the expense of living is everything. Another that we haven't talked about is your health and healthcare needs. Most especially, have you planned for long-term care? Healthcare needs later in retirement and especially end of life can take a giant chunk out of your savings. Another is debt. When you're looking at your monthly expenses, do you have a car payment? Do you still have a mortgage? Do you have high credit card balances that you're paying off? Also, inflation, obviously, the longer that you're in retirement, if inflation and overall market performance can really impact the returns that you have to continue to live on.
Yeah.
Another is lifestyle expectations, as we've talked about, whether or not you want to travel a lot, if you like to eat out. A lot of people in retirement really want to be able to help their kids out. And so those are all various expenses that you need to ensure that you take into account. And then lastly, the other thing that you want to consider is from a tax perspective, what are your sources of income? Do you have primarily taxable income, or do you have high balances in your Roth accounts that can provide you a good steady stream of tax-free income?
Okay. Cheri, so let's talk about some of the things that we can control, right? And so, we might be able to reduce our expenses by moving to a lower cost area. So you alluded to a moment ago when you raised your eyebrows and said San Diego, that you're in San Diego. I'm in Scottsdale.
Mm-hmm.
Those aren't necessarily low cost areas.
Right.
They're wonderful areas to live in, but they can be a little more expensive. So looking at where you live can also reduce and can reduce your expenses. Delay retirement or work part-time.
Right.
So, I find that some employers will work with people when they want to retire and reduce the number of hours they work and let them continue to contribute. Or maybe you just want to take your expertise and do some consulting. But even a little bit of work producing a little bit of income can make a big difference if you just did that for a few years and just kind of ease your way into retirement. Also, build in some healthcare planning. And so, I think a person can do an honest assessment of their health and what their risks are over the next 10 or 15, 20 years, right? And I know that's not going to be perfect. Accidents and other things can happen.
Sure.
But you can do an assessment of your health and factor that into your planning so that you can be more prepared for that. Also, we mentioned earlier, but do some Social Security planning. When are you going to take Social Security?
Right.
Are you going to do it early at 62 at full retirement age, or delay to 70 or later? And so do some Social Security planning as well. And then, you can adjust your withdrawal rate over time. And so you don't have to stay fixed at 4%, right? You might have years where you just know this is going to be a lower cost year versus a higher cost year. You may have years that your portfolio is doing really, really well versus years that, that there's a little more stress on that portfolio.
Mm-hmm.
So there's some things that you can control that can help you, make sure that your $2 million will last you through retirement.
Right. Absolutely.
So what do you think? Do you think $2 million is enough, Cheri?
Well, I think the conclusion is really that $2 million can be enough, but it really depends on you. It depends on the specifics of your situation. whether you're frugal and low debt going into retirement, whether you're healthy and you've been planning, then it's very doable.
Yeah.
If you look, sorry.
Yeah, I was going to say on the other end, if you really just enjoy that luxurious lifestyle, right? Having
Mhm.
relatively new luxury cars and expensive vacations and expensive meals and travel and so forth. That $2 million is going to be under a lot more stress, and you might still be able to make it, but it's something that you'll need to spend some time planning and be real serious about your budget and what you want to
Right.
spend, and see if that matches with the income that you'll have.
Right. Absolutely.
Yeah.
So I
So
mean,
it's not. I was going to say, just to say it another way, it's not just the number, but
mhm,
it's the plan behind the number that is
absolutely.
going to make all the difference.
Right. And being very specific in that plan, not just dreaming a big number that you're targeting like $2 million, but being very specific in the numbers that you're looking at in your plan.
Yeah, very good. So, what I would recommend, if you're not sure if 2 million is enough for you or not, either run your own numbers or work with a professional and get those numbers, down. To Cherie's point, we want to be very specific.
Right.
And so, but I would say if you found some value in this discussion and in this video, please hit like and subscribe. Also, you can find us at clientfirstcap.com. From there, you can find more videos like this or sign up for our monthly newsletter. Or if you feel like you'd like to have a conversation with someone, you can reach out to us on our website. Again, I'm Cary Smith. This is Cheri Turner, and I appreciate you listening in.
Thanks, Cary.